Um, Dobra utra, ladies and gentlemen. I understand that with these technological devices, I must look more like Michael Jackson than a World Bank executive. But this is the price we have to pay to technology. So, I don't know how much Nurtas has told you about me. I'm Italian. And as you can see, not all of the Italians work for the mafia. There are still a few of us who do normal jobs to raise a family. And I live in Tunis, from where, for the World Bank, since many years, I follow a program in the Middle East, North Africa, and Sub-Saharan Africa regions to support regulators, to support government, to support lenders and credit bureaus, to establish credit reporting best practice. So, when we speak about credit reporting best practice, mainly we speak about two things. Establishing a private credit bureau where there is no credit bureau, and you must believe me that in the past 15 years we have done lots of work. And the second pillar is to revamp, to reorient the old-fashioned, archaic public credit registry, generally managed by the central banks. Why this? Because in the past 10 years, many things have changed. Public credit registries in our region, in MENA, Africa, Central Asia, have generally been built by central bank to give information to the banks, to the lenders, and not for their own purpose, institutional functions, okay? So this is the second pillar of our work, trying to modernize a little bit the way central bank use granular data for their own purposes. And when we speak about on purposes, especially we want to say that we had to shift from traditional banking supervision to risk-based supervision, which is not to intervene after the damage is done, but preempt, okay? So, my presentation is divided mainly in two parts. So how can public credit registries support central banks in their day-to-day activity? And it's not limited to banking supervision, but I include their financial stability, monetary policy, statistic, research, studies, everything. All the institutional functions that a central bank has to carry out every day can be supported by credit reporting data. And then I will show you very, very quickly, very rapidly, two best cases. The third best case is Central Bank of Italy, but there is a speaker that will show you what they do. I have instead some real slides that come from a trip that I organize every year for central banks to see the public credit registry of Bundesbank, Deutsche Bundesbank, and European Central Bank. So let's start. 2008 should tell you something. What happened? The day where our life changed. We can speak for hours. I think two words, Lehman Brothers, are enough to understand what happened. So that year was very difficult. For 80 years, thanks to regulation, we did not have any financial crisis from 1929 to 2009. And then the Clinton administration started to change the rules. And the Glass-Steagall Act that imposed Chinese walls between investment and commercial banking went down, and that was the initial, the beginning of the end. So after the financial crisis of 2008, 2009, our life, all those who are directly or indirectly involved in the financial industry has changed, but particularly for regulators, okay? So there's been lots of new regulation like Basel II, 3, 4 probably just coming, IFRS 9, ICAS, COREP, FINREP. There are new players that are not regulated, that present a very big challenge, both for the traditional lending industry and for the regulators. Interesting to know that in 2018 and 2019, 60% of the mortgages granted in the United States are granted by the shadow banking sector. We are back to point one, the same situation where we were when the crisis started in 2008. But the difference is these guys, shadow banking, online banking, fintech banking, are not regulated. And then new technologies that are very difficult to control because they change so rapidly. New monopolies. Think about the famous FAG, Facebook, Amazon, Apple, Google. These guys possess all the information they want on us. 3 billion people are into Facebook. And they are asking for banking license. They want to launch cryptocurrency like Libra. Can you imagine if all that power comes under the same roof? New data. In Madagascar, we are launching a project, and with our friends of Credit Info, we are trying to do it in other countries in Africa. I'm talking about Africa, where psychometric scoring will be launched with microfinance institutions and banks. Because take a country like Madagascar, for instance, only 3% of the population has a loan, traditional loan with the financial sector, bank or microfinance institution. What do we do with 97% of the population who is there? We need to use different data. And today we can use no matter what type of data you have. So all this to tell you that in the past 10 years, there's been lots of changes. And the regulators need to introduce new skills, build new capacity, and use new tools, and use them in a different way. So we go from traditional supervision to risk-based supervision, from damage control to risk prevention, from on-site supervision to off-site supervision. But to make off-site supervision, to prevent damage to happen, we need data. And we need granular data. We cannot continue to have a public credit registry with aggregated data. There's no possibility to run statistics and to prevent and to make risk-based supervision with that, okay? So, how can credit reporting help regulators in facing this new situation, these new challenges, new threats that they have to supervise, control, and regulate? Best practice credit report, as I told you before, is based on 2 pillars. A good national best practice credit reporting system must have 1 credit bureau and 1 public credit register, okay? They work together mutually, but they serve different clients with different services, and they have different objectives. I think one very nice definition of a credit registry is the one that the European Central Bank gives. And I suggest all regulators who are present here today to read this occasional paper series number 187 from the European Central Bank. Anyway, they say central credit registry, public credit registries, are usually operated by national central banks. They commonly serve the purpose of banking supervision. Private credit bureaus are usually run by private companies like FCB, like CRIF, like Credit Info, like Experian, and serve as a platform for participating lenders to share information on borrowers' credit workings. So, you see, there is a big difference between the 2 systems. They work together, but they do different things. Same definition is given by the ICCRR, International Committee for Credit Reporting, which is led by the World Bank, and to which many central banks of the world participate. So, what is credit reporting best practice in practice? It's the 2 systems, see, Credit Bureau and Public Credit Registry. The Credit Bureau gets all the borrower's data, all risk. The Public Credit Registry is focused on large exposures. It's focused on large exposures only. Credit Bureau serves all the industry, regulated and non-regulated, supervised and non-supervised entities, financial and non-financial entities. Credit Registry is only for supervised entities, okay? Who are the clients of the Credit Bureau? Non-banking financial institutions, MFIs, banks, fintech, online, mobile telephone operators, utilities, etc., etc. The clients of the public credit registers are mainly the internal departments of the central bank. So, macroprudential regulation, banking supervision, monetary policy, financial stability, etc., etc., okay? This differentiation must be very clear because the two systems are needed in a national credit reporting system, but they do different things, give different services, serve different clients, okay? So there are a few principles I would like to share with you to try to define what is the structure of a good public credit registry. Number one, credit registries are focused on systemic risk only, okay? What does it mean? See, this is a statistic that I have downloaded from the public credit registries in my country. Central Bank of Italy makes the public registry data public. Any citizen, or even you can enter the website of Central Bank of Italy and download the statistic you want. I try to understand what is systemic risk. Systemic risk is the concentration of risk in the hands of few people, okay? So in Italy, for instance, 80.38 of total credit outstanding in the country corresponds to 10% of borrowers. You understand? If you are a regulator, you don't need to control 100% of loans in your country. You have to control what is systemic risk. 10% of the population corresponds to 80% of total outstanding. If you look at non-performing loans in Italy today, 81.09% of non-performing loans correspond to 10% of the borrowers. So, if you're a regulator and you control that 10% of borrowers, you're controlling your country. You're controlling systemic risk, okay? And this is why you don't need small loans inside the public credit register. So in order to avoid to have small loans inside the public credit registry and focus risk-based supervision on large exposures, on the largest banks, on the largest borrowers in the country, you need a threshold. Credit bureaus don't have a threshold. They accept and collect any type of loans, from nano loans to big exposures. But in the public credit registry, if you want to focus on large exposure, you need a threshold, okay? So, just to give you an example, Bundesbank in Germany, Deutsche Bundesbank, as a public credit registry, is a top-notch public credit registry. They accept only exposure beyond 1 million euros. That means that all the loans that are granted in Germany that, for exposures that are lower than 1 million euros are not reported to the public credit registry. That means also that only 630,000 borrowers in Germany, over a population of 80 million, are inside the public credit registry. And this is sufficient to Deutsche Bundesbank to control their system. Okay? And we will see later how Deutsche Bundesbank uses its public credit registry. But you see that practically everywhere there is a threshold. In Austria it's 350,000 euros, Belgium 25,000, Italy is 30,000, France 25,000, Spain 6,000. Can be higher or lower, but this is it. Number 3, public credit registry must host lenders' data and reference data. So, if we have the wrong idea that a public credit registry is only fed by data coming from the lenders, from the banks, it's wrong. The data coming from commercial registries, from legal sources, reference data, to create groups, for instance, is fundamental. So we have to think to a public credit registry as a large data warehouse that is fed by many different sources of data. And finally, number 4, most important. In many central banks, when banking supervision needs data from the banks, they call the banks and get data. Monetary policy, they call the banks and get other data. Financial stability need data, they call and get other data. No. Good public credit registry is one single source inside the central bank that allows every department to extract the data they need and use it, okay? And it must be granular data. It must be loan by loan data. So very quickly, very rapidly, I think I have 7 minutes left. I want to show you the case of Deutsche Bundesbank and the European Central Bank. So I was telling you before that every year we organize a study tour to Italy and to Germany to see these 3 public credit registry and the credit bureaus there for a certain number of central banks where we have projects, okay? And the slides I'm going to show you is not my slide, the slides of Deutsche Bundesbank and European Central Bank, okay? So firstly, let me go, okay? So you see, this is a good credit reporting national system. There is a credit bureau that was founded in 1927, before the public credit registry of the central bank and the public registry of Bundesbank, okay? So as I was telling you before, there is a threshold of 1 million euros. Everything that is below 1 million is not inside the public registry of Bundesbank. In Germany, the public credit registry reports is part of the banking supervision department. But we will see that in most other countries, the public credit registry is part of the Department of Statistics, like Central Bank of Italy. I was telling you before that the public credit registry is not only fed by data coming from the supervised entities. There is a lot of information inside, see? And you see reference data, credit data, evaluation. So as many sources of information you have, the better it is. Not only for the quantity of data, but especially for the quality, because a better matching happens there. So see, in 2018, they had 528,000 borrowers inside the public credit registry and 630 in 2019. And they have 1,703 lenders who report data every month. The other 62 million of Germans who have a loan are reported to Schufa, the credit bureau. What utilization does Bundesbank make of the public credit registry? Banking supervision, financial stability, monetary policy, research, statistics. And of course, they also give services to the lenders, but different services from what the credit bureau does. It's more alerting, messaging, rates of interest. Other important usages of risk-based supervision is stress testing, benchmarking, impact studies. And they use I was talking at the beginning of my presentation, a differentiation about the old traditional banking supervision. The risk-based supervision is to preempt, to try to avoid that another financial crisis like the one in 2008 will happen. So for that, you need an early warning system that must be based on the data and the statistic you can make of the data inside the public credit register. See, in Deutsche Bundesbank, they have a daily report on the 100 biggest financial institutions or groups and 100 biggest borrowers. Once you control those 100 people, practically you have controlled all the system in the country. And this is what Deutsche Bundesbank would tell you about the benefits for the supervisory authorities. Supplies the banking supervisor with a comprehensive overview of large borrowers of the individual credit institution at fingertip in a second. Helps to detect the risk structure of credit transaction and recognize significant borrowers of an institution. Again, significant borrowers. Regulators are interested in risk concentration, not in all the borrowers existing in a country. Enables early identification of possible risk developments. Helps to achieve the prudential objective of the banking supervisor to keep. Traditional and currently main purposes of the German public credit register. On the other side, we have Schufa. Schufa is one of the oldest credit bureaus in the world, 100 years old almost, 343 million records inside the database, 62 million German people are reported, 2,000 clients, and you see the differentiation between the type of services rendered by one and the other. In Anacredit, AnaCredit, if you have not heard of it yet, is the mother of all public credit registries. So imagine, every month, all the 19 central banks that belong to the euro area have to send 90 variables on each single loan above 25,000 euros to the European Central Bank every month. It's a huge, it's a very costly and very sophisticated system. Okay? So practically, as the blend of 19 public credit European registries. So it's, AnaCredit comes from analytical credit data set, so it's exactly the opposite of synthetic data set. It's the difference between aggregated data and granular data, okay? And it's the envisaged usage of the database is monetary policy, as analysis, risk management, financial stability. Again, you see the utilization of public credit registry is mainly for the internal institutional functions of the central bank. So AnaCredit was created after 2008 because all the changes I was telling you about when we started my presentation. There is a threshold, it's 25,000. 25,000 euros. So every loan that is below that is not in AnaCredit, is in the national credit bureaus in every country. It's 90 variables. There are 305,000 lending institutions in 19 countries that every month share data with AnaCredit. And this is a snapshot. Started in 2018, contains loans and guarantees, only credit institution for now, so banks, only legal entities. There are no loans about individuals, exposure about 25,000, loan by loan, every month. Every loan that is beyond 25,000, 90 variables are fed by national central banks to AnaCredit. See, you see below, Riyadh is the reference data. Above is the data provided by the banks. And this is the utilization that is done by the European Central Bank and by the national banks. Monetary policy implementation, risk management, financial stability, macroprudential policies, developing new announced statistics, okay? So I want to close here just saying that the granularity of data is the only way that you can use credit reporting for the institutional tasks of a central bank. So, spasiba, which is all I know in Russia. Thank you very much for your patience.